a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We're going to find out why cybersecurity ETFs have gained renewed popularity with our ETF research director, Nina Mishra, who joins me here. These have been around for a while, so they're nothing new, but the whole topic of cybersecurity has come into focus again.
It's always in focus, you know, because our world is becoming increasingly digital and interconnected, and this interconnected, digitized world presents a lot of opportunities. We see technologies like the Internet of Things, smart cars, but also a lot of challenges. Because there is so much data available online, and then there are so many sophisticated tools available to access and process that data, that ensuring data security in this digitized world is very, very challenging.
And it seems like you hear about a new hack at least once a week.
Sure, and there have been so many high-profile hacks of late, like Equifax, Russian hacking in our election, and all that, Yahoo's big hack.
Right.
So that is why cyber crimes happen and cyber hacks happen on the rise. And according to a new report by Cybersecurity Ventures, cybercrime will cost the global economy $6 trillion annually by 2021.
That's a big number.
That's a very big number, 6 trillion annually. And global, they also expect that global spending on cybersecurity products and services will grow to 1 trillion cumulatively by 2021. So there's a lot of spending. Companies are spending a lot to ensure safety of their products and services and the data related to their clients.
It would seem like it, yeah.
Yeah, so that is why it makes sense to invest in cybersecurity companies. But many companies in this space are smaller, more volatile companies. So that is why an ETF approach is better in this high growth but volatile space.
Bottom line, it's here to stay.
Yes, it's here to stay.
All right, I guess fortunately or unfortunately, depending on how you look at it.
Yeah.
So you have brought with you two examples of some ETFs that deal with this.
I focus on cybersecurity companies.
Yep, and the first one is ETFMG Prime Cybersecurity, right? HACK is the ticker.
Very, very appropriate ticker.
Yep.
So this ETF was the first cybersecurity ETF on the market. It launched in November 2014, around the time a little after Sony hack, in which North Korea was supposedly involved. So this was a very popular ETF when it was launched. It gathered $1 billion in assets within a few months of its launch. That was one of the most successful launches in the ETF world ever. Now it follows a modified equal weighting methodology, and if you go to the code page and you can look at the details, it charges an expense ratio of 60 basis points. And looking at the fact sheet, you will see that it focuses on software, communication equipment, consulting, and internet software services, these kind of companies. And it actually divides cybersecurity companies in two buckets, one which provide hardware and software, and the other bucket for companies that provide services. And within each bucket, those companies are weighted equally. So single company risk is rather low. US accounts for about 76% of assets, and Israel also a pretty big weighting of almost 10%, which is not surprising because so many Israeli companies are leaders in cybersecurity technologies.
Interesting.
And you can see some of the familiar companies. Cisco has been one of the leaders in this space, Palo Alto, CyberArk, Security, Fortinet, and this has about $1.4 billion in assets as of now.
Okay. And then First Trust has a product out as well.
Yes. So this, the ticker is CIBR, CIBR, again,
Cyber, yeah.
interesting ticker. And it focuses more on liquidity of the companies. It follows a liquidity weighting methodology, and also it includes companies which have market capitalization more than 250 million.
Okay.
Whereas for the first one, for the hack, they include companies with market capitalization more than 100 million. And so you can go to the quote page. Expense ratio is the same, 60 basis points. And going to the sponsors website, you can look at the holdings. Again, cybersecurity leaders like Palo Alto, Akamai, Symantec, VMware, Cisco are the top holdings. Software accounts for more than 50%. Communication equipment is the next sub-industry with about 19% of assets. Now, comparing the two ETFs, because CIBR, it focuses more on larger companies and follows liquidity weighting methodology with a minimum market cap of 250 million. So when smaller companies in the space do better, then hack will have better performance.
I see.
When more established companies perform well, then cyber would have better performance.
It's an important distinction, too.
Yes,
They're
sure.
not all the same.
There's slight difference. They are not exactly the same, though they are focused on
little nuance.
Yes,
Yeah.
yes.
Okay. So can we see how they compare?
Yeah, so on this slide, I have the year-to-date performance of hack, cyber, and SPY, which is the broader market ETF, and you can see that hack is up more than 16% this year. Cyber is up about 14%, whereas the S&P 500 ETF is almost flat in 2018.
Okay. So it's really, when it comes to investing this year so far, it's really about sectors.
Yes,
Identifying the
exactly. Some sectors have done really well, some have not, and whereas the broader market is almost flat.
Yeah. It's a market of stocks, not a stock market, we used to say.
Sure.
Do you own either of these?
I do not.
All right. Always more ETF information, on our website, Zacks.com. I say that all the time, and all you need to do to get to it is start at the home page and then use the Funds tab in the top toolbar. It will help guide you to that ETF section of our site. With Nina, I'm Terry Ruffalo.